Good afternoon, Fabian Onetti with the Musings of Winston. We're going to cover May 31st, June 4th. Remember, May 31st, Monday, it was a holiday. And the Dow Jones for the week did 226 points, so 0.7%, the S&P 0.6, and the Nasdaq 0.5. Slow gains, but we like it slowly, and as we say, walking under the shadow, we like this market. And why? Because we have the super, very, ultra important labor report on Friday, which was a disappointment. The market was expecting 650. Some people were whispering 800,000, and all we got was 559. But worse than that, it was not that issue. Remember, last month for April, when everybody was waiting for a million plus, we only got 265,000. And everybody was expecting that number was a fluke and a statistical problem, error, and that now we were going to get a better number. It was meagerly reviewed to 278,000. So clearly, Mr. Powell is right. Yes, the economy is recovering, but very uneven. We still have close to 8-9 million people without a job. Although the output of the United States is the same pre-COVID, so massive improvement in productivity. We are producing the same that we did the year before COVID, but with 9 million less people. So the point is, the Fed will keep feeding, monetarily speaking and maybe fiscal speaking, from the Biden government on that issue. So we like it because the market is, remember, the earnings were spectacular for the quarter, and the market not advancing or advancing less than what the earnings did it got cheaper in valuation and relative terms. So anyways, I thought it was a very, very important number, and I think, again, unfortunately, less growth than we expect, but, it validates Mr. Powell's view that things are still need to get work. All right, quickly. Looks like the G7 chiefs are agreeing on this 15% tax, which would be a huge seismic change in the world. Remember, a lot of big corporations skirt taxes by billing from fiscal paradises like Cayman, Ireland, Singapore, and avoid taxes that should be paid in different countries. With this 15% flat tax, everybody pays. The fight then will be, how do we split it? What people buy in France from Amazon goes to France, and what if people buy from Google in India goes to India. So it's not going to be easy, but I think it's a good idea. Commodities keep on a rally. We have oil at the top of 2018-19. More demand, again, as the world economy is coming back. We have better news on COVID in the U.S. and the rest of the world in general. Sooner or later, better vaccination, better rates, we're doing better. And one of our favorite markets there is Brazil, commodity. Remember, the central bank raised rates, so we have a good thing. And we're at 506 for almost 6 at the worst part of the crisis. So a huge rally. And a good rally in the equities. We like it. Remember, the symbol is EWZ. It's a great story. And, commodities, emerging markets. Remember, emerging markets did not rally as much. This week, we will have inflation numbers. We'll start, I think, at the end of the week with CPI, PPI. They are important, but less important, because we know that we're going to have a spike. We know everybody's talking about the bottlenecks, from people that you talk on the street for the numbers, but many people, the Fed mainly and most importantly, think that this is temporary. And it's a good example. After World War II, in 1946, when people came back from the war, the U.S. had mobilized 12 million people. And GM and Ford went from making tanks and planes to making cars and refrigerators and whatever. Inflation spiked to 20% per annum. And then within 2 years, went back to 2%. If you remember, the 50s and 60s, inflation was very, very low. That might be happening here. World War II, like this pandemic, is an event that happens once every 100 years. Hopefully wars no more, but pandemics do happen. So this is something, a 100-year event. So many people, we have a big debate on that. Some very serious people say careful, inflation is here to stay, it's very dangerous. Others think that it's temporary. we're thinking that for now it's temporary, and since the wolf is not here, we can play in the forest by being long. One of our super favorite companies, Zoom, reported great numbers. I'm not going to go into the details, but the important thing for this company is the growth of users. And as 70% of the companies say that they will have some form of hybrid operation, they will need Zoom. And some people say, well, but we're going to use less. See, he says, we're going to use Zoom, but less Zoom. You don't pay Zoom for the usage, you pay for Zoom for the license. So as far as you have Zoom, you pay the license. This is like not the old days where you had a phone and they charge you for how much you talk or the electricity or the gas. If you have Zoom, you have it. If you don't, you don't. So careful, because if many companies will adopt a hybrid system going forward for the long term, this is good news for Zoom. We like the stock. We still don't own it because it's very expensive, but we're liking it every day more. They're launching some new applications, and this could be something that maybe makes the change there, and we might have an interest. And lastly, chart. Some entities like Bybit, Binance, BitMEX give you 100% leverage. Repeat, 100 times leverage on Bitcoin. So you put $1 and they'll lend you 99 or 101. Be careful with that. Since times immemorial, we all try to invent currency. What better than invent the currency that we can go and buy stuff and, out of nothing? Be very, very careful, especially when, one guy moves. Elon Musk tweets one thing, the thing goes up, down, tweets another thing, the thing goes down. Very careful, very dangerous. And more when you see people that are giving you leverage, because at the end, the invention of currency is the invention of credit. That's what you want to do. You have a currency, and then you have credit, and you want to use that to grow on whatever, as all as the world goes around. So very careful with that. That's all we have. Every day, 8:30 live from New York, Zoom interactive with our clients. You can visit our page at winston.capital. Have a great week.